Friday, May 28th, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at how the path to currency and middle class destruction has been set by a sea of red ink, more deficit spending, more debt from the federal government in the United States. Before I start though, I'd just like to point out that we have a new mug. It's a silver squeeze mug, and there you go. And it's got the silverback and Billy the silverbug. So there's a silverback here and Billy here and some silver coins in the silver bar. And it's on both sides, of course. So you can find that in my Teespring store. So yes, yesterday there was an announcement from the President of the United States, and it says Biden to propose $6 trillion budget, increasing federal spending to highest sustained level since World War II. So what I think is happening here is a question of doing a lot for the general public, but actually having the opposite effect. And I don't even think it's the law of unintended consequences. I think the goal here is to make government even bigger, federal government even bigger, make the middle class and the working class more and more dependent on government, a lot like in Europe, make it more socialist. Am I saying what happened in 2008 and last year, all the largesse of deficit spending, more debt to help the top 1% was right? No, two wrongs don't make a right. And in this case, that is the situation. All this will do is going to make the middle class less and less wealthy. It's going to eviscerate the middle class eventually. It's going to destroy the working class. In the short term, it might have a positive impact, but the inflation of the currency is going to completely destroy the middle and working class. Those are the people who don't have the wherewithal to protect their livelihood from inflation. The very wealthy are the ones who are going to benefit. They might not even benefit, but they will do okay from this. So, and the question is, why would someone do this? Why wouldn't they do the right thing? Well, because you need to realize that these people are not there to help you. And that's why I always say, try to avoid politics, try to look after yourself, look after your family, maybe help your close community, but because these people are not after your own interest. And yes, so let's go quickly through this report. It's from thehill.com. It says, President Biden is set to propose a budget totaling $6 trillion in the coming days. The New York Times reported early Thursday, about a third higher than pre-pandemic spending levels. And here, as usual, I'm not being partisan or anything, because even during the previous administration before the pandemic, the federal government was running 5% of GDP deficits. They had suspended the debt ceiling, which is another problem that no one's really covering right now. But that suspension ends at the end of July this year. I want to see what happens then when people realize, well, we can't have this spending, or maybe they'll just remove the debt ceiling and have unlimited, which is pretty much what they have anyway. So the proposal would contain major investments in infrastructure, education, and healthcare, according to the Times, and bring federal spending levels to their highest sustained level since World War II. Yeah, this has been packaged as something to help the middle class. But I go back to the meme that I touched upon maybe a few weeks ago about the minimum wage in 1964. and it was $1.25 or 5 of these quarters, silver quarters, right? They weigh just under a troy ounce put together. I did the calculations this morning at around $27.63 per ounce. The minimum wage in 1964 was around $25.30. So what we need is the opposite. And I guess that's why I'm a contrarian. Yeah, we need smaller government, smaller spending. We need less inflation. Well, we need no inflation, because inflation really, deep down, it's another tax. It's theft, right? They take away the value of your money every year. Money should be a fixed weight of gold and silver. Just like the measure of weight, you can't change how heavy the pound is every day or every second in the let's say in a forex market, like they do the value of money. It would be a crazy world. You can't change the way you measure speed, how fast a mile is every second. It would be a crazy world. And that's why the economic financial world is so crazy. That's why we have these existential crises every 8 or 10 years. So I would say going back to sound money, going back to small government, is what would help the middle class in the long term and the working class. I mean, back in the 60s, even until the early 70s, I'm not too sure, a household only needed one person working and they lived very comfortably. Nowadays, it's all up in the air, and a lot of people are not even working. They're being supported by taxpayers or the future tax payments of their children, grandchildren, and great-grandchildren. And this is what's going to happen here. So I diverted a little bit from that article. So it says, under the plan documents for which were obtained by the Times, the federal government would spend $6 trillion in 2022 fiscal year, and spending would increase to $8.2 trillion by the year 2031. And you can bet with these things, the forecasts are always worse in terms of how much they're going to spend, how much the deficit is going to be. It's never better. So you can bet this is going to be a lot worse. So the other thing that I heard someone saying, I forgot who said it. And why do I say that? Well, because I like to give the person credit, but basically said that after the '08 crisis, when Obama came to power, they didn't do enough. And they think that the effect of all the government spending only took place towards the end of his administration and towards more the Trump administration. So the thinking right now is that you have to do as much as possible in the beginning to make sure that the economy is in better shape by 2024. I personally think they're going to have a shock, because this is going to eviscerate the value of the currency, and it's going to make things even worse for the middle class. So before we look at the markets, I'm not going to read through this article. I don't think it's necessary. We know how things are going to end up. Will he get this proposal through? Maybe not, but it's just the idea that this is what they're looking at, which is pretty scary, I would say. I wanted to show you some data from the Federal Reserve. I've shown this to you guys before. It's the Board of Governors of the Federal Reserve System, distribution of financial accounts, distribution of household wealth in the US since 1989. So if you go to 1989, and unfortunately can't go back further, the bottom 90% of Americans, they held about 40%, just under 40% of household wealth, as you can see here. And the latest figure for the fourth quarter of 2020, the bottom 90% held just over 30%. So we've had years of ballooning debt and deficit spending since 1989. And the bottom 90% are the ones who are suffering in terms of wealth accumulation. And it's only going to get worse, in my opinion. So here's the debt clock. We're at 28.3 trillion. We are at 128% debt to GDP almost. So in about 4 years' time, in 2025, the debt will be at 50.3 trillion. The debt to GDP will be almost 200%. So, and I think this is going to get worse. And this is forecasting everything being normal until 2025. And I think that's pretty rosy outlook. So with that, let's quickly look at where the markets are this morning. It's 8:15 a.m. London time. Spot gold. Yeah, gold has been finding it hard to break through that 1900 level. You would think with this announcement of all this deficit spending yesterday that gold and silver would have gone up. They didn't, but I wouldn't be concerned about that. This is very short-term movements. I think people will realize eventually that there's nowhere else to be but gold and silver in terms of monetary savings. So right now, gold is down $6 at 1890. High's been 1899, the low 1887. Silver is down 17 cents or 2/3% at 27.66. The low's been 27.58, the high 27.92. The Dow future is up 189. Seems to be that whatever happens, the stock market keeps going up. And why is that? Well, I think it's more of a reflection of the collapsing dollar, really. You want to hold anything but dollars. Eventually, gold and silver and commodities are going to outpace paper assets. That's my view, a medium to longer term view. The NASDAQ 100 future is up 25 points. The S&P 500 is up 15. Sterling, to the currencies, yeah, sterling is down 0.1% at 141.85. We've got the euro down slightly at 121.83. Dollar is unchanged versus the Japanese yen at 109.91. And the dollar is still very weak versus the yuan at 636.97. The Aussie dollar is at 77.20, down 1/3% this morning, so down quite substantially, the Aussie dollar. WTI crude is unchanged at 66.74. High-grade copper is down overnight, but it's up from when I made my video yesterday. I think we were at 455. Now we're at 463. It's down 0.75%. And the 10-year yield yesterday rallied back above 160. I think it was because of this announcement. Really, we're going to have more red ink. The U.S. Treasury is going to have to borrow even more. So is that going to help growth? Well, it's going to help growth statistically. Yes, GDP is calculated by adding government spending to the equation. And when you're spending massive amounts like they are, multi-trillion dollar deficits every year, of course it's going to make it look good. It doesn't mean, though, that it's a healthy, productive economy where people are living happily and prosperous in a prosperous fashion, right? So the 10 years at 162, it's up 1 basis point. I think yesterday we were trading around mid 150s, so it rose quite a bit. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great weekend. Take care. Bye.